Hello there, Forex traders. Welcome to this weekly heads up at Admiral Markets. We're going to take a look at the Forex market and some interesting situations going on because we have major gaps on the majors and crosses in this week's open. So lots of action going on. We're going to take a look at that in 1 second. Before, of course, we do that, we're going to take a look at this risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video and webinar is for educational purposes only. Please pause the video to read the entire disclaimer. And I welcome you back and thank you for your attention on that. So this week, I'm actually going to take a look at the euro dollar because I have an interesting swing trade idea. Besides that, we're going to take a look at the pound dollar for some intraday analysis and the dollar yen to see what happened with that triangle and the break of that triangle. So make sure to hang on to that these trade ideas here on the euro dollar, for example. But before we discuss that, I do want to mention the fact that we have great educational content at Admiral Markets. First of all, we have awesome educational webinars, if I may say so myself, presented by myself and Tarantala on Mondays and Thursdays. We discuss a variety of topics, anywhere from fibs to characteristics of currency pairs, and their list goes on and on. Now, we do a second step as well. We take the theory and we implement it in practical trading as well. So any of these concepts we learn in the educational webinars, we practice them and implement them in real life trading situations and environments in the live trading room, and that is on Tuesday, Wednesdays, and Thursdays from 7:45 to 9:15. So I highly encourage you to join and take a look at those as well. Besides that and the webinars, Admiral Markets also has great spreads, and that is one of the reasons, of course, that it's lovely trading, because if you take a look at the spread numbers, just some of these currencies, you can quickly see the advantage of that. So make sure to pause and take a good look at that. Now, I encourage also to take a look at the social media of Admiral Markets, Twitter and Facebook. And with that said, let's take a look at the economic calendar. Monday and Tuesday are light days, but Wednesday, September 18th, we have the USD FOMC statement with, of course, the USD or US Fed Chairman Bernanke speaking. So those are always key notes for the market and very volatile moments, so be careful of that. To sign up for our educational webinars, by the way, go to admiralmarkets.com, click on education, go to webinars, and you'll get this page. You can sign up for all the webinars, trading breakouts today, live swing trading tomorrow on Tuesday, live market analysis and trading on Wednesday, live intraday trading on Thursday, and how to trade divergence, an educational topic, on Thursday. To access any of the recordings, go to Video Archive. With that said, let's head over to the chart. We're taking a look at the euro dollar right now, and many lines on here. That's because of the Camarilla indicator, pivot point indicator, that adds a lot of lines to it. But if you concentrate on the yellow line, the yellow one, that is the fib retracement of the entire down move. So we had a 5-wave down move here. More importantly, if we fib that entire move down, price gapped open basically to the 786. Very interesting, because price obviously stopped at the 236, at the 50, at the 618, and is now pausing at the 786 fib. The question will be, will we get a bounce off the L3 pivot point indicator up to the H3 short area right at the 886 confluence as well? That is very likely, I think, but it's primarily interesting for me is if the currency would to approach and reach the 886 fib. The confluence of the 886 fib in yellow and the H3 short in green is pretty strong here. So if the euro dollar were to move up today, maybe tomorrow, up to the 886 fib, that is a likely resistance area or a long-term resistance area, and a move down, who knows, maybe to the minus 618, which is all the way down at 129, 128.50, would give a 500 pip fall for this euro dollar. So that is a gigantic movement all the way down back to the bottom of the daily range. And that's just a great swing trade I had in mind, and that is the one I wanted to share with you. So from a different perspective, from a different chart, you can see here that the price has moved down pretty impulsively, and we're hooking back to that trend line that we bounced off. And obviously you can see the space to the upside is limited because we're right at a resistance, right at the top, right at a weekly trend line, right at the top of the range. And the space to fall is huge. Quite big space here relatively to the bottom of that purple trend line, to the bottom of the wedge. And relatively you can see the term here, the terms to fall, huge space, and very limited risk, and a great reward to risk to the downside. If that were not to happen and price were to break up, then I would want to take a long upon the retracement of the broken trend line, and that would be good areas to long. But I'm not going to go long right in front of a resistance like this. That would be a bad practice. I would rather wait for either to break to the upside or indeed to catch this 886 to the downside. Now let's move over to the pound dollar, the cable, and due to the volatility you can see that the Camarilla pivot point indicator is quite stretched. The H4 is all the way above at 160.34 and the H5 target is at 161.11. That is 80 pips and way far from here. The L4 is the same situation with 158.44, some 100 pips lower than the current price, and the target is another 80 pips lower. So obviously could be more of a range day today than a real breakout day because of the length and the spaces in between. If we focus on the range day type of day, you can see that there's a L3 at right just at the gap actually at 158.90. The gap of this weekend is just at that spot, as you can see here, and we closed right there last week and we opened a lot higher, 80 pips higher right there. So that could be of course logically a confluence for a bouncing spot up to the H3 around 159.88, which is also close to the psychological 160 level. So that would be good to keep an eye on here on the cable. From a different perspective, we're looking at here the pound dollar on the weekly chart, and you can see that the currency definitely broke through the 618. It respected the 382 right in here. It respected the 50 and respected the 618, and is headed now towards the 786 Fibonacci of this entire weekly down move here. All right. So price sending a message that it does want to go up, but the resistance in a nice uptrend channel, but the resistance is right at 160, key 786 fib level. And in fact, if we zoom into the day chart, you can see a nice uptrend channel. Beautiful channel, good angle, 3 hits on all ends, so very nicely built. And within that uptrend channel, you can see that we broke above the red resistance line on Wednesday, but how is the most important, because we did it with a very good candle close above that resistance level. The candle close obviously closed very nicely above the resistance level, indicating strength and indicating that there was no false breakout, no rejection after the breakout. The bulls remained in control. We had a small inside day on Thursday and then continued Friday and the weekend, in fact, with a gap. A likely move up to the 786 is likely, I should say, but we should be aware that some retracement of this weekly candle could happen before we do that, as indicated by our pivot point Camarilla indicators as well for today. But I'm talking more about this week on this chart. And then eventually we'll have to see if the 786 gets respected. Probably yes. If we make a bull flag, one more move to the 886 is likely, and then we could see maybe a close in reverse for more downside. If the 786 would provide a close in reverse and we get a subsequent bear flag, a continuation downside is likely. So we'll have to see which of the two scenarios plays out. I think looking at the strength the pound is doing now, it would seem more likely to see a bull flag and continuation up to the 886 and then a move down. Last but not least, the dollar yen. We talked about the break of the triangle, and you can see here last week, and you can see good triangle break, but last week didn't get a continuation, and that is a bit of a surprise. If you see the, of course, the uptrend here prior to that, a good triangle wedge and a break of that, one would expect a continuation. Didn't happen as yet. So we'll have to see how the price responds to when it does move back to support at these Fibonacci levels, 618, 786. If we fib the entire move up from the weekly bottom here, if we can get some continuation to higher grounds on the dollar yen. Well, that wraps it up for this week's weekly open, as I can say. Looking forward to see you tonight and tomorrow and the rest of the week with regard to our webinars, and I wish you all great trading. Cheers.